Just glad you're okay.
I'm never late.
Oh,
You
you're in
can
your
see
office.
my
So you didn't sleep in if you're in your office, unless you slept in your office.
No, I was distracted by something, so I have no good excuse.
This big Merck acquisition this morning, is that what you're?
So I'm going to talk about that, but it's very frustrating. Not because I didn't own it, but maybe if I owned it, I'd be like, great acquisition.
So we've had two this week, Pfizer and Merck. They're both big companies. Seem to be trying to backfill the inventory.
Yeah,
of the pipeline.
there's another one with some small companies, Alkermes, and somebody else is battling over another little tiny company. They Avadel is being acquired by either Alkermes or someone else, and Alkermes, the other company, put out a new proposal today, and it's a better deal, but let's see. Let's quote it. Let's quote and let's say live now. All right, let's go. There we go. So, when do you want to begin? Do you guys want to begin now? Should we begin
and roll.
early? Whenever we
Rock
begin
and roll.
early, people who are just getting the tweets or the X's, whatever you call them, they don't have time, so they miss out the first little bit.
Where the hell?
Maybe kind of zip up your shirt there a little bit, David. You're looking a little disheveled.
All right, let's see. But by the way, it's a collared shirt that I have here. It's just one button too many. A little Tom Jones.
Both of your chest hairs were showing.
Those are taped on, by the way, every morning.
Whoa.
All right, let's see. Anyone know where Tom Jones is from, by the way?
Wales.
Yeah, one of the few Welsh people to come out and become superstars.
Why do I know that? I can't remember what I had for breakfast, but I remember useless facts like that.
Well, I mean,
Sad.
you have been to more Tom Jones shows than anyone, so that's. Alrighty, well, let's begin. Even with our very few folks that are just building now, this is Wall Street Beats. I should face the camera instead of my other screen here. I'll try again. And action. This is Wall Street Beats. It's the 14th. It is a Friday. It has been a long week of mostly down, and probably some people are a little sad about their things, their portfolios. But you have to look back about a year ago, and you'd be like, hey, you know what? Things are pretty good. So the 14th, we got Bob Morris, we got Kevin Bakes Baker. I'm David Maris, and let's first start with some drugs. I'll start the morning with drugs, as we often do here at Wall Street Beats. So first, Bob had mentioned that Merck announced a deal today. They're paying a more than 100% premium for a public company. Sounds kind of ridiculous, right? And the thing that gets me about this are two things. One is I own Merck shares, and Merck used to invent drugs, and they still do. So to be fair, they still do. But all of these companies say that they're focused on innovation, that we can't affect pricing. We can't have price controls in the US because if you do, you'll never get another new drug in the US. You'll all die because the next pandemic comes out, you're not going to have a new drug. And I get part of the argument, right? Price controls stifle innovation. That's true in some large or small degree based on what you think. But just remember, when they pay 100% premium, they're taking money from the sick class or the patient class that they've harvested profits from, and they're taking it from the investor class to a different investor class. And that's not really innovation. Now, they would argue, I'm sure, that well, if we didn't do things like many of these drugs might not make it to market. And I hear that theoretical part, but the part that bothers me is, first, you should focus mostly on your own innovation and talk to that, and stop trying to fill in potholes. They have Keytruda, which has been a huge home run for them, and it's going to go off patent in a few years. And so they're trying to fill in this pothole that's coming. And drug companies can never really do that well because it's too big of a number to fill in. So they try to fill in with things that will start to launch or be on the market around the time, and it'll smooth things out. It's such a bad use of capital, in my opinion. I think it's better to explain to investors, look, we're not raising money, so this is what's happening over the next couple of years. We're going to have a down year in earnings, and then we're going to come back out of it as our innovation drives this. Once you start buying your innovation, I think it's a tough slog. Someone said, "Hey, remember Cubist and remember some of the other things that they've bought." And you know what? A $10 billion, $15 billion acquisition doesn't really mean a lot to Merck's balance sheet. I know they can do it, they can afford it, but at the margin, for me, it makes me like them less. Doesn't make me dislike them. I'm still owning the shares. I haven't traded a share around it, anything like that. I do think they're one of the very few super ethical drug companies, but I don't like when this isn't lighting money on fire, but it's just not what I would want my company to do. So
Sadara, right? CDTX.
Let me ask you a question. When they pay 100% premium, I mean, is that because the stock is cheap? Is it because there are other competitors, or are they desperate? Because, why not pay 50%? I mean, 100% is unusual for a public company. So what drives that level of premium?
Yeah, so they know this asset pretty well because they used to be partnered with them. I think it must be because of a competitive bidding situation. There must have been a process. Now that will come out eventually in the documents when this deal gets filed. But if not, that's just crazy. And I actually do think that there is a lot of that. I happen to know one of the folks at the BD department of a very large pharma company, so similar in size to a Merck, where the lawyer had told me they missed out on a bunch of deals. Now, this was a couple of years ago, so this isn't, I'm not telling current information that I shouldn't have or anything like that. But they said, look, we've missed out on a few deals, and the CEO is furious. So he's told the finance department, do what you can on the next one. Like they're, and that's how these deals are done. Everyone likes to think that they have a giant finance department and they carefully look at everything. They do the DCF, and the return on invested capital is going to be a multiple of what their cost of capital is, and that's how they do it, and that's the discipline. And I'm sure for some of the acquisitions that is the case, but for a vast majority, I really do believe, and what I've seen is, look, I want this. What is it going to take? Yeah. And it's kind of funny money. It's balance sheet money. It's sitting there. Let's spend it. If we don't spend this money, what use is it? These are the kind of arguments that board members don't hear, but finance departments hear from their CEOs that are berating them. So I'm not saying that's what happened here, but I agree with you that 100% premium is just unusual. I'm not. It's just, we've seen a bunch of these. We saw Pfizer outbid Novo for something, and they were kind of probably bidding against themselves. So that said,
the market seems to like it. Merck's the only drug name up this morning.
Yeah, it's a pretty cheap name, and that's why I said I think it's the fact that they know this company and that they used to be partnered with them and the rest. But maybe what you'll see is kind of like Pfizer. They liked the deal originally, and then they start to go, okay, now you have to digest this. It's not a big digestion for them. I mean, it's not. So, yeah, not my favorite. Not my favorite thing. You see, Bristol Myers is down a lot today. We haven't talked about Bristol Myers in a long time. I did say the last time, like, I just wouldn't own it. It has a lot of patent expiries. Well, one of the reasons that they're down is probably the only reason is that they have a deal with J&J. They were developing a drug today. They said, hey, we're going to stop the phase 3 because it doesn't look like it's going to work. So if anyone's wondering, like, hey, should I chase Bristol Myers down 4% and with a 5% dividend yield? It's like I don't even know what to say. It's like if you're a trader, I guess that would work out, and I wouldn't want to be held to what the next 3 days are, but it's just not a really compelling investment. It's just we don't know what's going to happen to that dividend as these things start to go off patent. So, not in my portfolio. But that's about it in healthcare land. Let's see if there's any other news. I know I had something else here on a scratch pad, but I can't find it now. So let's find it here. Some pricings happened, some overnight pricings, but that's not what I wanted to talk about.
There's been a lot of chatter this rotation of money out of AI names or big tech has been going into healthcare because it's cheap.
Yeah, so you weren't on the last kind of couple calls that I've been on with Ben, and we've talked about that and the XLV. That's the the healthcare ETF. There's also the XBI, but if you just look at the XLV today, it's outperforming the S&P. The last few days, it's been up and been very defensive. Now you could say, well, outperforming on the downside is also defensive. I would argue that. What we said yesterday was that there's going to be a catch-up trade because the XLV, the XBI have been doing well the last few months and outperforming by a lot. What happens when people are underweight things, large investors, when you're closing in at the end of the year, they don't want to be so underweight these names that they show up as underweight and they underperformed this year, and it's very clear why they underperformed. But so I think that's going to continue through the end of the year. I think one of the reasons you're seeing Lilly and Novo do well is that they're not involved in, especially Lilly, with the settlement with the government. That's put aside one of the worries that they had about drug pricing, but also they're not involved in any major deals, and they're kind of doing smaller deals, and Lilly's just been everyone's darling. So, and everyone wants it to be $1 trillion stock, as though some sort of you get to $1 trillion in market cap, and all of a sudden you unlock something special. I don't think you do, but it looks pretty clear that they're going to get there. So, anything else in healthcare land you want to talk about before we move on to oil and gas and the chilly weather and all of that? Bob, let's go to you first and talk about the.
So it's interesting here. I'm watching these energy names. You've got oil up above $60 again today, right at 60, up $1.40, and that's really just on the headline news that Ukraine attacked one of Russia's oil export facilities. Not major damage, but they did have a successful attack and knocked out some apartments and some equipment and such like that. And that put a little bit of nervousness into the market that if Ukraine's going to step up their aggressiveness in attacking oil facilities, which they've been doing, that could impact the supply of oil. And remember, on the 21st of this month, the sanctions kick in, the newer sanctions against the two largest Russian oil companies, as far as Trump saying you can't do business with these two Russian oil companies, or we're going to punish you for that. So that's really what's driving up oil here this morning. It's just that concern that supply may be impacted by both the increased aggressiveness of Ukraine in attacking Russia's oil facilities, particularly if they go after more sophisticated equipment like crackers and such that are hard to replace because that equipment is from the West. And so if they can blow up stuff that they can't get replacement for, that impacts the supply. And then you've got these sanctions coming that we've talked about before. The oil tends to make its way into the market some other way, even though you put sanctions on the two big Russian oil companies. But what's interesting is that with oil up $1.40, these energy names are down with the overall market this morning. And I think that's the main thing, is that when you get a pullback in the market like we did on the open this morning, people tend to ignore what's going on elsewhere and just say, okay, I got to lighten up across the board. Energy, as we were talking about healthcare, being a beneficiary of some of this rotation. Energy should be a beneficiary also, in that it does, in my opinion, look cheap. It is a very small percentage of the S&P. I think some a little over 3% now. So it doesn't take a lot of rotation of money and energy to move these names. And you mentioned that the market's down on the week. Most of these energy names are up on the week. So they've, despite oil down here below $60 a barrel and the pullback in the market, energy's held in very well. So I think there's been a little bit of money come into energy that's come out of perhaps tech or some of these other sectors. And energy, if I were a day trader, I would have bought. I'm not a day trader. I know you've asked me about that before, David. I'm not a day trader, but if I were, I probably would have bought some of these energy names, down, 5 minutes into the open, just on the fact that the overall market was getting hit and oil's up nicely here today. And you see some of these bouncing back a little bit. But on the other hand, natural gas is off this morning just because it's warm out. We're in the Northeast here, and it's middle of November, and it's going to be the low. I think I saw tomorrow is like 50 degrees. That's supposed to be the low. So weather or Mother Nature is not helping us here at the moment. But natural gas has had a nice run here. You look at some of these natural gas names that we pounded the table on and talked about, Expand, UPT, they're up very nicely, 15% here in the last few weeks, around plus or minus. And so even though they're off today, they've had a nice run here. So we'll keep an eye on those. I'm not going in and adding to my overweight position in those names today, but I'm keeping an eye on them. I'm glad that I'm there. And the oil names, I'm sticking with. And I think Bakes and I were talking coming into the show. C&Q, they reported a good quarter last week. They had a good analyst day, no big surprises, but a very solid analyst day that I thought was well received. And, the stock's holding in nicely here. And technically, you can chime in here, Bakes, if you got some thoughts there. But technically, I think it's forming a nice base here and looking good from a technical perspective. Remember, this is a big oil name, but they're also the second largest natural gas producer in Canada at the same time. So they sort of win on both sides of the equation, although natural gas is a fuel to their oil sands operation. So there's a little bit of trade-off in that sense. But it seems to be doing very well here. The other name that I'm watching is Chevron. They had a good analyst day this week. Probably not as, not real exciting. There wasn't a whole lot new. There wasn't expectations for a whole lot new. But again, a good update in what is, in my opinion, still a solid company. So, it was down a lot, not a lot, but it was down a good bit this morning. It's bouncing back here now. And again, another name that's up on the week. So I think it's interesting to watch here in this market. If we continue to get this pullback in tech or the AI names, does some of that money come into energy? I think energy's set up well for that to happen. But again, you're beholden to the commodity and what's going on with headlines and Russia, and still most of the arguments out there are for more of an oversupply environment the first half of next year, although the market's been able to hold in here around $60 a barrel. So, we'll see how that plays out. Oxy came out earlier this week. They said their 2026 budget's based on oil being in this range of 55 to 65. We've sort of said we think it's going to be 60 to 70, but most companies out there being conservative. So, if you were to get an event that were to drive up oil prices, some geopolitical event or some really major infrastructure disruption in Russia, oil could run up very quickly if that were to happen, and all these names would probably take off with that. But again, I think energy's cheap here. I think it's well positioned if you get any sort of further big rotation out of these big AI or tech names. We'll see how that.
What is the? Well, you said the names that could run on. Let's say oil does spike and it's sustained. Which are the names that you think would run the most?
I think C&Q would. I think that among the majors, although they're more tied to some of the broader market indexes, but Chevron, Exxon, and then you're looking at probably Diamondback, Oxy, Devon, Apache. Those would probably be my big names on the more oil levered side. Oxy's interesting in that, they're going to pay down their debt below their $15 billion target now with this OxyChem sale to Berkshire Hathaway, but there's good leverage on every dollar change in oil price to their bottom line. So, that's a name I don't own, but that's a name that if we saw oil rip here, that would be probably one of the leading beneficiaries.
So I guess it was reported just a couple hours ago that Iranian forces seized a tanker in the Strait of Hormuz, and it was the first attack in months. Is that something that, I mean, in your experience, does that escalate? Is this like a one-off? Is this a, hey, you bombed our nuclear facilities, now we're taking a tanker? You know what? We need to show that we're tough, and it doesn't escalate, or does it escalate?
I would be surprised if it escalates to any degree because, one, we've had a lot worse situations in the Strait of Hormuz that didn't end up escalating. I mean, and I think they know, especially after what happened earlier this year, that they're going to get slapped very hard if they do anything they're not supposed to be doing. Especially from the current administration side in the U.S., where right now they're touting low energy prices, low gasoline prices, low prices at the pump, except for California, that is playing into their hand and bringing down inflation. So the last thing they want to see is Iran get out of line here. So I think that that does. I would be surprised if that escalates. I'm surprised they seize the tanker there. I don't know what the details are behind that, but I'd be very surprised if that escalates. That's not something that any of the West is going to allow to occur. But again, if there's a bull case for oil, and we talked about this repeatedly, if there's a bull case for oil, it's got to be something along the geopolitical front, some supply disruption.
Okay. All right. So what says you, Kevin Baker Bakes? What do we have on your agenda for this week?
Yeah, before I go to mine, I just wanted to talk about C&Q, which Bob and I were talking about ahead of time, and I'm just noticing the relative strength pickup here. It isn't definitive yet. Relative strength of 60 on CRK. Apparently, according to Bob, it's 40% nat gas, 60% oil, give or take. The volume's picking up. And then my next levels here are 33.24. A close above that looks pretty nice, and then 34.34. And it looks like it wants to do that. Now, I wait to see the whites of their eyes, and I'm willing to pay up $1, to have that bullish reversal in. But it looks really nice in the long-term chat. The long-term chart looks really promising as well. So I like this. CRK I've been talking about, this is Jerry Jones' nat gas play. And I'm just struck by the persistence of my charts are really slow today for some reason. I apologize. But CRK, look at this. I mean, this is 11 straight days of up. So someone really wants to own this stock. And if you see the 50-day come up through the 200, it really kind of confirms that CRK is getting it onto some radar screens and into portfolios. And again, you don't need a lot of names to get to 3%, 4%, 5% of the S&P, be overweight and have a bet on for 2026. So I've been saying for a while, I'm really starting to like oil for the first time in about 4 years. So stay tuned, please.
Yeah, and by the way, C&Q is about almost 30% natural gas, not 40%.
Okay, my bad.
It is the second largest gas producer in Canada, so they benefit from that side of it.
Okay. And this surprised me. I talked about this a while ago, and I put this in the category. This is Eastman Kodak, KODK. And you're probably saying to yourself, huh? I thought they were dead. I really did. And but they're not. And they are, I haven't listened to the call yet. I will. And this kind of showed up late last night, but this is clearly perking up. They are getting into pharmaceutical manufacturing. So this might be a name that you take a look at. I'd really love to have your insights. Their specialty chemicals business is benefiting from the fact that they're domestic. And so they're competing against tariff-laden specialty chemicals in that business. This insider buying that is happening here. The balance sheet is getting better. And apparently the real estate is on the books for $60 million, and private estimates say it's 175 to 200. So there's a lot of potential. I know this is speculative. I don't own it yet. I can't own it in individual stocks. It's in the Russell 2000, so it's a small part of the IWM. But I'm just intrigued by, the earnings call clearly was received warmly, and I'm intrigued here. So I'll keep an eye on this, and I'd love to see what you think of their pharmaceutical operations if you decide to take a look.
All right. I will. I think, by the way, years and years ago, they tried to do a giant acquisition. I want to say that Roche was doing an acquisition, like a multi-billion-dollar acquisition of a drug company. And this is back when Kodak was Kodak. And they had big aspirations to be in pharma. They ended up losing the bid, but it was a hostile, like they came in to do an interrupting bid, and they were turned down. So, but that was ancient history. So yeah, I'll take a look at it. It's not a good sign. While you were speaking, I pulled up their website, and one of the first things it says, highlighted. What does it say? Featured reports 2023 Form 10K. It's they're about a year behind on their website of fixing the featured report. So
yeah, full disclosure, this has a lot of hair on it, but and you can see from the long-term chart, this became a meme darling at one point. I don't really know what the narrative was, or maybe it was just, let's take it to the shorts and hurt them, and but that's over. But this is clearly a base, clearly the changing. If people sell, insiders sell stock for all kinds of reasons, but there's only reason they only buy them for one reason, which is they think it's going up. So I stumbled upon this late last night, but I'm going to listen to the call and right. Compare notes with David.
We'll take a look at Kodak. What else do you have for us?
Okay, now I'm a little sheepish with this because this doesn't really help too many people. CoreWeave, because obviously their report was detested, but I bring this up because it's going to be interesting to see how. I think this is a canary in the AI coal mine, and let's see how this acts when if it bounces, and what happens is this 8440 level meaningful resistance that serves as a ceiling for the foreseeable future. And my suspicion is that if they say anything about delays, push out. And certainly if they start talking about lowering guidance, this is going to be a bad place to be. So CoreWeave for CRWV, in essence, is an outsourced data center company and utilized by Microsoft and the hyperscalers. Microsoft is a big part of the business, and they've been talking about pushing out some projects. And people say, it's going to come on eventually, and we'll see. We'll see, but 8440 is very important, and I'll watch this to see how it acts when it gets there. My suspicion is it gets repelled, and this is a ceiling for the time being until they say, "Hey, we're back on track and everything is going on schedule." But until then, I think this is very suspicious of the AI build out.
Oh, what a tangled web we core weave.
Oh, you've been dying to say that, haven't you?
Exactly. That's I trademarked that though. So,
there you go. I like
all right. What else do you have?
I got one more, and Bitcoin, BITB, and I just picked this one because I've owned this in the past. I've been bullish on Bitcoin in the past, and the reason why I think we add value is that we can go from bull to bear. Well, now I'm a bear. I sold this here, and I sold this around here at $60 when it was no longer one of my top 10, and now it is becoming more definitive. Here's the close below the 200-day, and the 200-day just started turning down right here. So, and look at the volume. Okay, something bad is going on with Bitcoin. And I've mentioned this before that I didn't like MicroStrategy, MSTR. I guess they're now called Strategy, and that's rolling over too. Coinbase is acting really ugly. So we're spending Bitcoin spending too much time under 100,000 for the bulls' liking. The podcasts are becoming less cocky, and I don't know what the bear case is that they're piling onto. Dollar strength, I don't know, but Bitcoin is in trouble. And if you have bounces here to this, 57 level or so, the 200-day, again, I think that's going to be on feeble volume, and you might want to take a poke at shorting it again. But MicroStrategy rolled over before this because they're obviously a leverage play on Bitcoin. But I think, and all these treasury Bitcoin companies look like dog meat, and so Bitcoin's the tide has turned. The tide has turned, in my opinion.
So I give a lot of credit to all of us at Wall Street Beats for saying like MicroStrategy just doesn't make sense to us. That like, why would you buy that when you can buy the underlying asset, or if you call it an asset, the underlying Bitcoin. And this rollover is, I mean, not knowing anything really about Bitcoin or MicroStrategy, I can just say when you see something like this chart wise and you're a holder, you're like, oh my God, what do I own? This is you start to catastrophize it because it's down almost every day. You're like, oh, this is. So I agree. Something really weird is going on. And when it comes to Bitcoin, again, this is my completely ignorant prediction. Everyone talks about like under 100, you have to buy it because it's going to go from 100 to $250,000, and it's like over and over. I think if it breaks this $90 range, and that's what I want to ask you, Kevin, where do you think technically it breaks down? Because it hasn't been there for a while, and I think if you all of a sudden see that, people are going to start to panic.
Yeah, I think they're, and I listen to I don't know, 20 podcasts a day, and a lot of them are Bitcoin enthusiasts, to put it mildly, and their voices are quivering. It isn't. It's the mood has changed. Before it was people, tripping over themselves to come up with Cathie Wood-esque price targets for Bitcoin. And I don't hear them anymore, and they're not as confident as they used to be. So, I don't have the Bitcoin chart right here in front of me, but again, as it stalls under 100, the more time it spends under 100, the more the bull case gets tougher to defend. And your 90 level, I've not done, exhaustive analysis on this, but apparently, the MicroStrategy converts and debt get into real problems with marking to market below 90. And that clearly the chart is saying that. So I'm watching this. I'll look at the Bitcoin chart itself. All the ETFs. Sorry,
I was going to say, put that in the chat, and for folks that want to know, hey, wait a second, he's going to put that in the chat. How do I get a hold of that? You have to go to wallstreetbeats.com to subscribe, or passes.com/wallstreetbeats, and that way you get insights in the chat, kind of what's moving directly. So I think it would be great if you could put that in there.
I don't know. I think you used the word catastrophize. Is that like strategic?
Yeah, catastrophize.
I don't. But I wonder too, with not only Bitcoin, which I think is still up year to date, maybe 8% or something. I don't know. You can tell me, Bakes. But and some of these AI stocks like NVIDIA and such, as we get to year end, as some of these start to pull back, how much of this sort of panic sets in that people say, oh, I don't want to lose my gain in it for the year. Let me just sell it and get out of the way right now before it goes down another 10%. And then I don't have a gain for the year and I don't have my bonus in place or whatever. But I think some of that certainly starts to play in here year in when people start to get worried or panicked about names they have big profits in starting to pull back and losing that gain for the year if they don't get out now. And that can sort of contribute to the momentum on the downside. I don't know how much of that's in there, but there's certainly some aspect. And Bakes, I don't know if you can, if that shows up in the chart somehow with the volume and such that you see that as a signal as part of the variable playing in here too.
Yeah, I mean, people are getting increasingly nervous, and the sell tickets are getting larger, and the up volume days are less impressive. I mean, here's strategy, and I haven't seen Saylor at a conference recently, and I haven't heard him on a podcast. So, the market is really, really smart, and someone is sniffing out that. And I haven't heard about what kind of outflows the ETFs are experiencing. But again, I was a bull, and now I'm a bear, and that's a head and shoulders top. Period. End of discussion. This is Bitwise, BITB. It's just, I think this goes to 40. That probably equates to a sub 90 level on the Bitcoin itself. But it's a bad place to be.
Yeah. All right, so let's wrap it up with something I forgot to mention about Blowco and BHC. So Bausch and Lomb and Bausch Health. So as you might, just a reminder, Bausch Health owns something like 80% of BLCO or Bausch and Lomb. So people think of them as separate stocks, but really they're tied together. And Bausch and Lomb held their much touted analyst meeting yesterday, or investor meeting, and the stock was down, 4 or 5% yesterday, down another 1.5% today. I'm sure that every market maker who wants to do the next debt deal will try to close it flat or something, but we'll see. The analyst day, the reason people sold it off is that I think that they're starting to realize that, hey, there's no magic unicorn that's going to fly down and save Bausch Health, let alone save Bausch and Lomb, and that they gave very modest revenue guidance over the next few years. Of course, their revenue guidance always stops right before the Xifaxan patent goes off. Now, that's not a Bausch and Lomb product; that's a Bausch Health product. But they can't answer the question of what happens to Bausch Health when they can't pay all their debt when this product goes off patent. What happens to Bausch and Lomb? So the idea that, well, Bausch Health is going to lower their debt by selling Bausch and Lomb, well, that's not great for equity holders, right? If you held the equity, are you going to be thrilled about that? Doesn't sound like a great thing for an equity holder. If there's a debt for equity swap at the Bausch Health, I don't know what happens to Bausch and Lomb. I would imagine there's this similar dilution, but they can't answer questions like that. And so you want to talk about pipeline, pie in the sky stuff for a company that doesn't really invent a lot of things. Now, I had tweeted out during their analyst meeting that just remember, this is a company that's talking about innovation that sells a $800 drug that's over the counter in Europe for $20. Now, they claim that they're committed to R&D and innovation and the rest, but they're suckering U.S. patients. But when they say suckering, it's the U.S. consumer and the U.S. taxpayer, since dry eye is largely a Medicare population. It's, this is our tax money just being wasted for a drug that's going to come in this year, maybe next year, around $500 million. So it's a decent sized drug that we're all wasting money on. So you know what? Eventually people will realize it. I think eventually you're going to be closer to zero than you are to the current price. I think Bausch & Lomb will be under 10 in the next year or so, just as people start to realize, like, hey, they don't have any options. Now, not coincidentally, and I'm only saying this to the 1 or 2 people that have any ability to look into this, I also tweeted yesterday, someone should look into why Carl Icahn, who had 2 board seats, just left the company, sold all his stock after owning the stock for a couple of years, left, took a loss, and rode into the sunset just recently. Now, if you think that Carl Icahn, one of the greatest investors of all time, is like, oh no, I decided I have better things to do, you have to ask, like, why? Or is there even something more serious? I'll leave it at that. Anyone who knows me knows that I say that with peace and love, and I send that out to all of you that want to do the digging. But there you go. Let's end it there before I say more. But
And you're
enjoy
still
the
short the stock, right, David?
Well, so I mentioned that I'm not short right now because I had published this article that I sent around the other day. I published this article in Stat about this drug situation. And about a month prior to it being published, because I knew it was coming, I undid all my short related to it. Now, I've missed a bunch of downsides. So this has been an expensive article for me. And I think I'll put it on at some point in the next week or two. I just wanted to make sure that it was out there for a long enough time that no one could say, hey, wait a second, you were talking your own book. And so I'm not involved right now. I'm not involved. I'm not short one share. And so consider this a public service announcement.
No, that to your credit that you did that. That's very.
Yeah, there are many firms that make their living by front running their bearish reports.
Yeah, and I could see, I see why, like, whatever Cedarbrook or whatever those firms are that do that. That Andrew left. I can understand that people who are long stocks, they go on CNBC and talk up their stocks, and why can't people who are short publish these research things? I generally don't like that they publish things that are 600 pages, a lot of innuendo, and like a lot of just, look, the CEO drives a $300,000 car. Okay, that's a reason to hate that. And I don't like those kind of short reports. I just don't, for the amount of money that I would make on a $2 dip, being short to the gills on it, it's just not worth anyone ever questioning my integrity. So it's, but let them question it for other reasons.
Yeah, that's admirable. I give you credit. Kudos for that, David.
Yeah, amen.
All right. Well, enjoy the weekend, everybody. Like Bob said, it's going to be great in the Northeast. Maybe not beach weather, but from the follically challenged here at Wall Street Beats, have a great weekend, everybody.
Keep smiling. Thank you.
Thanks.
Thank you, Jen.